Let's start off with the fact that we have seen green all round today. It seems slightly muted. We're taking cue from a muted trading session in the US yesterday as well. Where to from here? It seems that most eyes are going to be on some of the economic data that is set to be released in the US later on today.
Good afternoon, Helene. Yes, market, a mixed bag. We're seeing banks, some banks up, some banks down. We're seeing some activity in the resource sector. Very much a market that is full of volatility. Investors really looking for direction and not really finding much. We're expecting that the market is probably going to trade in a sideways range for the next, for the next a couple of months until we see the Eurozone settle and we get some positive data that we are seeing a global recovery right now. The market has priced in a bottoming of the actual recession, but are we going to see a strong recovery? Are we going to see muted? And those manufacturing numbers out of the States last night pointed to that, and we saw the inventory rebuild coming through the previous months, and now manufacturers really just stepping back, waiting to see if the consumer is going to come through and snap up that demand. So cautious until they see something, and really the note or sentiment on the market is nervous. They need to see the Eurozone settle down and some positive data out. This afternoon we're seeing housing starts and building permits out of the States, so hopefully some positive momentum if those numbers come out better than expected.
We also have PPI set to be released in the US today. I'm assuming that's also going to be quite pivotal in terms of where the markets will be going. But I suspect that the building permits and of course the housing starts have been something that investors have been looking at because they haven't been performing as well as most investors would have liked.
Yes, Eleni, those housing starts and building permits are an indication, an early indication that the United States economy is starting to recover, and that has really disappointed investors previously. So we need to have some good numbers out there that's going to hopefully sustain the global recovery if we see the States coming back.
And investors, of course, also keeping an eye on European economic data. In fact, we had German confidence, which came out worse than expected. No surprise there, given that we have been seeing confidence coming under pressure in the whole Eurozone, particularly in Germany.
Yes, Lenny, it's obviously worse than expected, but like you said, not surprising. And once that's settled, the actual debt issue gets settled, and we see those austerity measures being carried out, and we see Spain, Portugal stepping up to the plate, and we just get some confidence back in the euro. We've seen the euro bounce off this morning on profit taking, but we need to see some more stability out of that reason before we could say the euro is going to be recovering.
Well, the rand's looking quite resilient despite the fact that we have seen incredible gains that have come through for the dollar, and the fact that we have been seeing risk aversion rising globally. On a trade-weighted basis, the rand looking quite strong. The fact that we have seen a little bit of a rebound for the euro, what does that mean for the rand going forward?
Today, it seems it's a euro rand play. I think we're possibly, if we continue to see global uncertainty, then we're going to see investors moving into the dollar as a safe haven. So possibly until the issues get resolved, we'll see a weaker rand in the short term, Helene.
Tiger Brands out with results today. Headline earnings per share an increase of 7%. What did you make of those numbers, Yolanda?
Helene, results slightly disappointing. We saw their operating margin of their staple goods coming in lower than what our analysts had expected. Their designer group implementation didn't go as well as expected. The dividend came in lower than expected, so disappointing. We have a whole recommendation on them, and I think what's important there is that trading conditions are going to remain difficult for them in the short term. So slightly disappointed, but still positive on the stock. But cautious, investors should remain cautious there. We have a one-year target of 194 Rand on Tiger Brands.
Yolanda, also looking at that platinum price, looking pretty strong in today's session. Apart from that, we had Johnson Matthey releasing its report yesterday showing incredible investor demand coming through for jewelry and ETFs as well. We had AngloPlat and Impala Platinum that released trading updates, and they're looking pretty bullish in terms of what we'll be seeing on a platinum price perspective. What did you make of those trading updates? We had the AngloPlat CEO talking of a platinum price of around $1,800 an ounce.
Positive for our platinum stocks. We have an average price of about $1,550 estimate for the year, with obviously some upside risk to those forecasts. In terms of Impala, that production update was very positive for them. They really are doing well. There's AngloPlat's projects are running really nicely, and they're going to be meeting their production targets. In terms of AngloPlat, we see that they came out with a trading update with the HEPS for first headline 10 should be up 20%, and I think we could see some possible upside risks to that, so very positive for them. And then we're seeing obviously the higher prices on palladium that are contributing to the nice PGM price, that the PGM basket prices that we're seeing. I think very positive. If we do see demand coming through, and our companies are doing some really good stuff in terms of restructuring and putting good projects and following through. So very positive for them.